GDR, Global Depository Receipt. GDR is a negotiable financial instrument issued by depository bank other than US bank. It represents share in a foreign company and trades on the local stock exchanges in investors' countries. Unlike ADR, who are listed in America, GDRs are listed in states or countries which has nothing to do with USA. For example, Singapore Stock Exchange or London Stock Exchange. It is commonly used by several Indian companies to raise funds from foreign markets other than USA. So if ADR is American, when I say GDR, all the countries which has nothing to do with India. How does it help Indian companies to raise funds through GDR? GDR assists multinational businesses in connecting with many investors. Also gives investors a chance to diversify their holdings globally. For example, if Infosys wants to list the share in Australia, they will deposit a substantial amount of shares with the Australian bank. The bank can then issue a receipt which is against the share of the investors, and that is known as GDR, Global Depository Receipt. To add further, Indian companies such as Aditya Birla are listed in Luxembourg Stock Exchange and UPL is listed on Singapore Stock Exchange. Have you been aware about this concept earlier? Comment below.